Ayodele-Bamisaiye of Dexteritas Professional Corporation. And it's this amazing Friday, Friday the 19th of September 2025. And I'm here as usual. It's Finance Friday. Yay! Yeah, I know the music is missing. I normally enjoy that, but tech is not helping me. But hey, we are here and we are live. So it's Finance Friday, and this morning, as usual, I'm talking about tax planning, and September is rounding out. We are getting ready to get into the home stretch of 2025. Um, what should you be thinking about with Q4 in mind? Now, hold that thought. Before we go any further, I want to remind you that if you have a low income persuasion and don't have your personal tax returns filed for whatever the reason might be, my friends at the Financial Empowerment Initiative Network are more than excited to help you get all of those tax returns filed. Whether it's 1 year or 10 years, send an email to operations at thefei.ca, and somebody will reply to you with an appointment options at least, and then we can get those tax returns filed. That's number one. Number two, yesterday was Founders Lounge. Hey, that was fun, right? Um, we Startup Court organizes the Founders Lounge. It happens at the platform, the East Annex, every third Thursday from 6 to 8 p.m. And yesterday we were talking about AI for personal productivity. That's because we recognize that we're heading into the last 90 days of 2025, and we're looking to make the most of that time frame. So we had Mr. E.V. Oputa come talk about AI for personal productivity, and that was a fantastic session. It went really well. The internet stopped cooperating at a point, so we didn't get to see, his agent creation process. But outside of that, there's some good knowledge, good information shared in that session. I'll have some of it on my LinkedIn before the day is out. So that was a really good one. I had fun and I enjoyed it very much. So that said, Q4, personal taxes, planning. What should you be thinking about? Yes, that's the question I'm asking. So here are my thoughts. Um, as far as taxes are concerned, if you're gonna, the basis of your taxes is always the income that you earn. So, if you are going to do anything to your taxes at all, you're going to be looking at your income to say, hey, how am I structured from an income perspective? How am I earning? Where is it coming from? So, you need to be planning your income. How much is employment income? How much is business income? Do I have any capital gains that I'm taking? Do I have any historical losses to use to defray that? And am I getting any property income? Either have property building I've rented out, or any royalties coming from sales of a book or something like that. So you're looking at all of that and saying, okay, what exactly is my income looking like for the last quarter of the year? What does that look like compared to where I planned to be at this time when I was looking forward into 2025 earlier in the year, right? Because when you have that clearly spelled out, it makes it very easy for you to identify, okay, this is where the income comes from. These are the tax implications of these income streams. So that's always going to be number one. That's always the first thing that we're talking about. Then you're looking at what are the deductions that I can take, right? If you're a business owner, you're sitting down and you're itemizing all of your business expenses, whether it's tuition and education, coaching, mentoring, travel, whether it's money for gas, insurance, professional liability insurance, commercial general liability insurance, life insurance. If you are a key person for your organization, most likely you are. All of those kind of things. So you sit down and you itemize all of your expenses. Once your expenses are properly laid out, then you're able to clearly say that, okay, this is how much is coming from the business income stream into my taxable income buckets, right? So you're also looking at all the personal deductions. So medical expenses are a personal deduction. You cannot deduct medical expenses in your business. However, you can deduct health insurance premiums in your business, right? You can your business use of personal assets, whether it's your car or your house or your cell phone, as the case may be, itemizing all of those deductions and it is a very, very, very important component of your tax plan. You're looking at your RRSP contributions and saying, okay, how much do I need to put into my RRSPs to get the kind of effect that I want on my income as far as my tax refund is concerned? So those are all things that you need to be taking a look at. Don't forget, TFSAs have no impact on your tax bill. What they do is they create an opportunity for you to invest money on which the returns are tax free. That's why it's called a tax free savings account. So your RSPs have an impact on your taxes, your TFSA does not. Your TFSA allows you to earn income tax free, and there are strict rules guiding that. So, no, do not use your TFSA like it's a trading account. That's not the way to go about it. Read the rules, read the room, and make sure you follow them. That's the way you stay out of trouble with the CRA as far as TFSAs are concerned. Yes, and the next thing I was supposed to go into is the tax advantaged account, which is the TFSA and the RRSPs. And then, of course, you're looking at RESPs for your kids if you have kids under 18. RESPs are not deductible for taxes, but there's a 20% matching by the federal government on contributions up to $2,500 annually. The intent is if you contribute faithfully $2,500, by the time your child is 17 going on 18, there's $51,000 in cash available for college. That is the plan. Well, very few people make it that far, but when you put the effort in, right, you find the value, and that's how it works. Charitable givings. Hello. Charitable giving is important. And the reason why it's important is because it has a two-pronged impact. Number one, you get to save on taxes. Number two, you get to create goodwill for yourself or for your business. And charitable givings are a very, very potent tax reducing deduction. So the way charitable donations work, you are able to give away up to 75% of your taxable income, and that is deducted off your taxable income. Yes, I know you don't want to give away $75,000 out of 100. That's what are you going to live on, right? Yes, I agree. However, when have that level of income, you are sitting down, you're asking yourself, okay, how can I incorporate this as a tool in my tax savings arsenal? And that is what I expect you to do. So sit down and take a look at that and make up your mind. However, $100 on $100,000 income is really not a lot. So you got to think about it and make a plan based on that. Lastly, records and organization. Hello. If you have a bag of receipts at the bottom of your under your car, your driver's seat in your car, you are doing yourself no favors. If you have a box of receipts under your kitchen, in your kitchen closet, on the closet in your room, or something like that, or worse, you have a bag of receipts in your garage, you're not doing yourself any favors. So with all the tools available today, your cell phone is the primary way that allows you, the easiest way for you to capture all of your financial information. The least you can do is take pictures of every receipt and upload it to Google Drive. It's free. All of that is free. That particular stack is free if you own a cell phone. There are many other things that you can do that can make that process really simple, really easy, and very beneficial when you are sitting with a CRA guy on the other side of the table, right? So do yourself that favor, ensure that you maintain good records and you organize the documents in a manner that makes them easy to retrieve. Hello. So if you haven't done any of this all year long, Q4 is around the corner. You have 3 months to get on this horse and ride it out, lay the cards straight, and ensure that you're properly prepared for tax filing season. And not just for tax filing season, but you can actually make it a happy season by getting yourself a healthy refund. If you don't know what I'm talking about, you can reach out to me at taxplanning.dexteritas.ca. I'm willing to have a conversation around tax planning there. It will be an opportunity that will put money back in your pocket. Yes, it will cost you a bit, but you'll be putting a lot back in your pocket when you create that opportunity for yourself. So it's Q4, finish strong. Every decision that you make puts money in your pocket or loses you money. So you got to think about it. This is Friday, the 19th of September. My name is Ayomidotun Ayodele-Bamisaiye of Dexteritas Professional Corporation. I've been talking about things that you should plan to do with regards to your taxes in Q4, and I'm excited to have a conversation one-on-one with you on this subject matter if you are interested. It's going to be a beautiful day. Yes, I can feel the chill. It's starting to get cold. But hey, it's September, right? So, September, the sun's still shining. We still don't have snow. I'm celebrating in Calgary, and it's a beautiful day. That's all for me this morning. I wish you an amazing, excellent weekend ahead. Happy Friday, and bye for now.